What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here on a daily basis, including money, investing, the stock market, the fourth stimulus package update, and stimulus check update. If you haven't subscribed to our YouTube channel yet, make sure to click the subscribe button down below right now, as it's completely free to do so you don't miss out on new videos that come out here every day. Also, thanks for hitting the like button for us down below. President Biden says the U.S. economy can deal with inflation, and yet more Americans are Googling the word recession, or recession 2022, than at any time since 2004. Yeah, in almost 20 years. And many people, including many experts that study this stuff, think we're already in a recession. And by some standards, we already are, especially by stock market standards. We're already in a bear market by several indices. The stock market had a rebound here yesterday pretty significantly. The Dow Jones index jumped over 600 points, and the S&P 500 jumped up 2.5%. This, as last week, was the worst weekly loss in over 2 years, going back all the way to March of 2020. Yeah, literally when the pandemic crashed the market. And and you could see here this 1 year chart of the Dow Jones index. We're at around 30,500. A year ago, we were at around 33,875, or around, well, depending on the day, almost 34,000. So we're significantly below where we were 1 year ago. So by that standard, we're definitely in a recession. But if you look at where we are on a 5 year chart, we're much higher than where we were 5 years ago. Even though we're on a significant decline or a dip right now, 5 years ago, the Dow Jones was only at around 21,000. So we're still massively up by then, and that includes the huge drop that we had in February and March of 2020. Yeah, so yeah, we went from 29,000, almost 30,000 of the Dow Jones there, all the way down to just above 19,000 there. Yeah, so that was a huge drop, about 50% or so. But the stimulus packages for the economy and for the people, and to help save businesses and everything, brought it back very, very quickly, as you can see here, just in a matter of a few short months. But the question is here, will we need more support now for our economy that, by many standards, is really struggling with this inflation that is out of control right now, gas prices that are out of control right now, food prices that are out of control right now, and millions of people that are struggling to pay their bills right now? And economists see a 44% chance of recession in the next year, according to a Wall Street Journal survey. As you can see here, the probability of the US hitting a recession within the next year is about 44%, according to a new Wall Street Journal survey of leading economists. That's the highest probability for a recession in the next year since the newspaper began asking the question in 2005. So this is the highest result they've ever had since they've ever started asking different economists. Remember that different economists always have different ideas and different results, right? Before the 2007 and 2009 recession, economists assigned a 38% probability of a recession, and it actually happened in 2007 and to 2009. Before the 2020 recession, they gave the economy a 28% probability of hitting a significant economic downturn. So it happened both times there with a 28% probability and a 38% probability. This time around, they're giving it a 44% probability. And some people think we're already in one right now. Former Treasury Secretary Larry Summers said on Sunday's NBC's Meet the Press that based on historical trends, the economy will likely hit a recession by the end of the year, this year. And, quote, nothing is certain, and all economic forecasts have uncertainty. And my best guess is that a recession is ahead. 53 economists in the Wall Street Journal survey who were polled from June 16th to June 17th after the most recent interest rate hike said they expect the Fed to raise interest rates to 3.3% by the end of the year. So, even more so than now. And more than half of Americans say the economy has already hit a recession, as inflation has registered 40-year highs last month and gas prices have doubled at the pump. I personally wouldn't be surprised if we are already in a recession. And a lot of times when we're in a recession, they find out and then they go back and retroactively say, yeah, we hit a recession and it started on June 1st, based on economic data that we figured out here, when the stock market declined, to such levels, and when inflation hit this level and that level, that is when the recession started. That's generally how, you know when they go and calculate all this stuff after the data comes in, is when they figure this stuff out. I wouldn't be surprised if we're already in a recession, which is weird because unemployment is so low. Unemployment is at 3.6%, and the federal government is taking in historic amounts of money, and the states are taking in historic amounts of money as well. We have all these states giving out state stimulus checks as well, tax rebate checks, lowering gas taxes, and grocery taxes, and income taxes or state income taxes. And the federal government, the CBO, the Congressional Budget Office, says that they're going to be able to lower the federal deficit by 1.5 to 1.7 trillion dollars over the course of the next 12 months because of how much more tax revenue the federal government is taking in, because more people have gone back to work, so more people are paying taxes. Same thing with the state level as well, paying state taxes and also paying sales taxes and such. So, because more people are back to work, more income is being generated, more uh, IRS revenue, more sales tax revenue. So it's odd, very odd, to say that we're potentially going into a recession. We're already in a recession. In fact, if times were different and somebody said that to you, unemployment is near a historic low. It's near a 50-year low. Remember, the 50-year low is 3.5%. We're at 3.6%. We actually hit 3.5% about 2 months ago or so. Briefly, we hit 3.5%, and then we've been kind of staying at 3.6%. And all these states and the federal government would be taking in record amounts of money, and yet we would be going into a new recession after coming out briefly of the pandemic recession. People would kind of maybe say, what? How does that make any sense? People are going back to work, revenues are up, state revenues are up, federal revenues are up, tax revenues are up, unemployment's low. And then you could say one key word, inflation. And then people might go, that would make sense. That would make sense. Or maybe you would put it into a little bit more context and say, inflation is out of control. And then people would go, yes, yes. All right, yeah. Okay, now it makes sense. not just a little bit of inflation, but a lot. Yeah, back breaking inflation. My back is hurting just already kind of thinking about it. Yeah, yeah. Gas at all-time highs, food prices at all-time highs, just not even keeping up with the Social Security raise. And it just kind of seems like when it comes to the price of anything, everything has gone wrong at this point. Yeah. And let me know your thoughts on how we can get this fixed. What are your thoughts? How do we fix this? Do we just wait it out? The war in Ukraine, if you watched my last video, yeah, there's some eye-opening stuff there about how long this could go on. Yeah, and the longer this goes on, it's just going to be painful for all of us. I mean, we know how painful it. I mean, we don't really know how painful it is for people over there in Ukraine. Lord help them. Um, can't even begin to imagine. But it's really affecting all of us. Of course, it's nothing like what they're dealing with, but even for the rest of the world here, we're looking at um, extra high gas prices, extra high food prices. They got all this grain that they can't really get out of there. Very little getting out of there. Gas prices just being, exacerbated. And this could go on for a long time, for a long time. And then we had this that just came out here from ongoing study by the Senior Citizens League. Social Security benefits lose 40% of their buying power. Cost of living adjustment for 2023 could be 8.6%. Yeah, so Social Security benefits have lost 40% of their buying power. Yeah, check this out. High inflation has caused Social Security benefits to lose 40% of their buying power just since the year 2000, only 22 years ago. You got to kind of realize that that's pretty much insane. According to the latest updates of an ongoing study by the Senior Citizens League, saying, quote, that's the deepest loss in buying power since the beginning of this study by the Senior Citizens League in 2010, says Mary Johnson, a social security policy analyst for the Senior Citizens League who conducted the research. Based on the most recent consumer price data released today, the annual cost of living adjustment for 2023 could be around 8.6%, which would be dramatic. Remember that last year it was only 5.9%. So 8.6% would be roughly somewhere around 50% more than the raise last year. You take 5.9%, that's almost 6%. We'll just round up to 6%. Half of 6% is another 3%. Add 3% onto 5.9% would be 8.9%. And this is 8.6%. So it's almost 50% more. Just my mental math there. I'm pretty decent at mental math. It's almost 50% more than last year, somewhere around 8.5%, somewhere in that range. And we're going to be finding that out here soon, as these next couple months come up here in the next couple months for the cost of living adjustment raise. But that would be significant. So if your Social Security benefits are $1,000, we'll just go with a nice round number there. The average Social Security benefit is more than that. But some people make more, some people make less. But if it was 8.6%, which is actually what last month's inflation number was, that would mean a raise of $86 per month. $86 per month. So that would be a lot. That would be a lot. And I'll bring up my calculator here. Yeah, so $86 times 12. That would be an extra $1,032 per year, every single year. So even if inflation goes down by next year, which we're not expecting this inflation to continue forever. They're expecting inflation to definitely start going down sometime in 2023 for sure. Uh, Dramatically down by 2024. This raise would still continue in, once you get those cost of living adjustment raises, they're in there forever. So that is kind of a little bit of some good news there, is that you would get this 8.6% raise forever, even though this inflation is not expected to continue forever. The last time we had inflation of this size was back in 1981. That's actually when I was born. Yeah, I'm 41 years old, but we know that inflation didn't continue at that rate of, eight and some percent, all the way through the 80s and the 90s and the 2000s, right? The average inflation rate is, somewhere in the 2% range. Okay. Um, and In fact, when we had the recessionary lows of the pandemic, sometimes inflation actually goes down to zero, or sometimes in recessions, when you have that recessionary low, inflation will actually sometimes go negative. Okay, there's actually been some cola raises some years where there was a zero cola raise, because there was no inflation at all that year. Those years are rare, but there has been some years where there was no inflation, so there was no cola raise. So I don't know if that's a good thing or a bad thing, but you didn't get a raise, but there was also no inflation that year. Again, those years are rare, but if that happens, an $86 raise per $1,000, every $1,000 you get for Social Security, that's pretty significant. This would be the largest raise in a long, long time. And remember that even if inflation goes down afterwards, that raise stays with you. That raise stays with you, just like the 5.9% stays with you. And that was the largest raise in 30 some years. This would be the largest raise in who knows how long. We'll have to see exactly how long it has been or will be. Um, but it might be actually be some good news. I know that inflation is super high right now, but we're not expecting this to last forever. We will have to see how long it will last. Also, I got a really good video coming up here for you next about President Biden and some checks, rebate checks, and gas checks, and the federal gas tax holiday. I'll also link you to a video I just did on that, and I have another video on Social Security raises. There's a bill in Congress about $2,400 raising Social Security benefits, and raising them to $1,415 per month would be the minimum Social Security benefits. So I'll keep you up to date on all this and everything going on here in our country that you need to know about. So make sure to subscribe down below to our YouTube channel. Just click the subscribe button and then click the bell icon so you get notifications when we go live. It's completely free to subscribe. So if you haven't subscribed yet, click the subscribe button now. I will keep you up to date here. You can click here to see that new video on the Social Security raises, $2,400 coming hopefully soon. And here is my newest video on the Ukraine situation with breaking news that just came out about that. Definitely check that out if you haven't seen that yet either. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.